Hey everyone, Couch Investor back with another Palantir video for you today. So I noticed that Palantir has slowly but surely become a fan favorite on the channel. First time I covered this stock was back in November. If you want to watch that, it's going to be in the top right corner. It has also become one of the biggest positions in my portfolio. Back then the price was $11, $12. That's when I opened the position. Since then I've been adding and adding, especially in the last week when the market had a little correction in growth stocks. So I took that opportunity to double up on my position. We're also going to look at what ARK Invest has been doing with Palantir. You will be surprised how big their position in that company is today. But overall, this video is just going to be me reinforcing my points, saying that Palantir is a must-have in your portfolio, especially if you have a long-term view and if you want to grow your portfolio steadily for the next couple of years. But before I do so, I just want to thank everyone that has been subscribing lately. And if you haven't subscribed yet to this channel, hit that subscribe button. If you like these videos, leave it an early thumbs up as it really helps me out grow the channel and get my videos out there. I would also like to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Fool's stock advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock advisors' average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Right, so first let's have a quick look at their Q4 earnings just to have a sense of where they're going. So we can see here that revenue of $1.1 billion for full year 2020, up 47% year over year. For Q4, revenue is up 40% to $322 million. Now let's go and look at their projections for Q1 and full year 2021. So for full year 2021, we can expect year-over-year revenue growth greater than 30%. Usually when a company says greater than 30%, it means that will be at least 30%, but I could be wrong. For Q1 2021, they expect year-over-year revenue growth of 45% and adjusted operating margins of 23%. Now, Palantir is a company that has been here for almost 2 decades and it's still not profitable. But if you look even deeper in the earnings report, which will be linked in the description below, you can actually see that they were profitable, but the reason why it's still negative is because of stock-based compensation. Yes, even after almost 2 decades, they still decide to reward their employees. But moving forward in the next couple of quarters, they are expected to be profitable, which is great to see. Now, the reason why they are reaching profitability now and not 10 years ago is because of the platforms that they offer. Obviously, they have Palantir Gotham, which is used by government and government bodies like the CIA, the FBI, and probably many, many others. And that's great. That's securing revenue. That's always good. That way they can expand if they want to. They know this revenue is secure for the next couple of years. We have those government contracts. Great. But then they added Palantir Foundry, and that's the cherry on top of the cake, because with Foundry, they can offer that service to more and more companies. Obviously, it's still very expensive today, but we expect the cost to go down with the years to come. And especially when you see an announcement like this, they're launching an ERP suite to deliver cost savings for AWS, Amazon Web Services, customers. So they say that enterprises across sectors invest heavily in ERPs, and they share in a common struggle how to realize the full value from disparate ERP data. To address this problem, Palantir developed the ERP Suite, a turnkey solution optimized to run on Amazon Web Services that enables rapid integration and analysis of data within the ERP landscape. The ERP Suite is now available to all AWS customers and has already been adopted by a number of enterprises, including BP and Lanxess, to enable significant cost savings within weeks. And to continue on that point, the ERP Suite comes out of the box with a library of industry-focused use cases such as supply chain optimization, which is basically a huge problem for a lot of companies that need to adapt and need to evolve in the digital age, that can be deployed in days. Palantir uses a Palantir Foundry data connector developed for ERP applications to improve data discovery, accelerate the time to value of ERP data, democratize workflow creation, and drive faster business outcomes. So in short, if you need an explanation of what Palantir actually does, is they predict the future for companies and governments. It's basically that, as crazy as it sounds, but that's the market that they're in. They're in the market of predicting what might happen in the future and making the best use of that scenario. For governments, that's probably seeing the different scenarios, the best scenarios to get out of a difficult situation. I don't know if they're in the jungle or in the desert, doesn't matter. Palantir Gotham is going to help with that. I highly suggest you go and look at the demos. You can find them on YouTube. I will try and link them down below as well. It's pretty amazing. And for Foundry, it can help obviously the Amazon Web Services clients, but it can also help, let's say, a small supermarket if they need supply chain optimization, if they need help with anything else, the finances, whatever, maybe restructuring of the whole store. Palantir is there to help those types of companies. Also, before I move into the next announcement, Palantir is not here to replace humans. Obviously, there's a lot going on that humans cannot do, like analyzing tons and tons of data, but they say it in a number of documents actually, that they're here to help humans analyze data better. Obviously, when a company collects, I don't know, millions and millions of data and data points, it's usually very difficult for the humans to make a choice. That's where Palantir comes in. They make that choice easier by visualizing whatever the data has been collecting, and then the human makes the final choice. Now moving into the next announcement, which is pretty cool. So Palantir announces double-click demo event on April 14th. Now this is the first time they are doing this. The first event will feature in-depth demonstrations of Palantir Foundry for life sciences and industrials. Palantir's customers in these verticals include Merck, NIH, NHS, which is in the UK, 3M, BP, and a couple of others. The software demos at DoubleClick will showcase how customers can use Archetype's Palantir's solution to deploy end-to-end use cases in a matter of clicks on top of Foundry, including life sciences and industrial. So if you have nothing to do on April 14th, I highly suggest to put this in your calendar. Now let's quickly look at some ARK's ETF and see how they're doing. So this is ARKW. We can see here Palantir at number 20 with around 5.2 million shares, and it weighs more than I thought, 1.78% of that portfolio or ETF. Obviously, number one at 10% is Tesla. So they're pretty convinced that Palantir is going to be great, because if Tesla is 10%, which is always their biggest, 1.7, 1.8 is not that bad. Now, moving into the next one, the bigger one, the ARKK one, Palantir is here at number 34, but here they have 10.4 million shares, and it weighs 1.13% of that portfolio. Obviously, in the ARKK, we know that's where the highest conviction stocks are: Tesla, Square, Roku, Teladoc, etc. Right, so to conclude, Palantir will stay in my portfolio for a long time. Right now, I think we're at $45 billion market cap. In the next 5 years, I do believe this company will be worth more than $100 billion. Now, I just want to say that ARK and Cathy adding more and more Palantir to their portfolio does not mean that you have to be buying this company as well. You have to do your own due diligence. If you like this company, great. If you don't like it, that's okay. I like stocks that Cathy Wood doesn't like. For example, Lemonade. She likes stocks that I don't like. I don't know which one yet, but there certainly is one in the list. So that will be it for this video. Let me know down in the comments below what your thoughts are on Palantir, what your price target is for this year and for the next 5 years. Let me know down in the comments below. And if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.